Did you know using the wrong card at the wrong time could cost you hundreds of dollars a year, or even damage your credit score without you realizing it? Whether you're trying to build credit, avoid debt, or just make smarter purchases, understanding the real difference between credit and debit cards could transform your entire financial life. In this video, we're breaking down the truth in simple, no-fluff language, so you can finally stop making costly money mistakes. Let's unlock the smarter way to use your cards. Many people use credit cards and debit cards interchangeably, but they work very differently. Understanding the distinction between credit and debit can help you make smarter decisions, avoid unnecessary fees, build your credit score, and even earn rewards or prevent identity theft. Let's begin by defining what a credit card is. A credit card lets you borrow money from a bank or financial institution to make purchases. You're expected to pay back the money at a later date, either in full or over time. In contrast, a debit card pulls funds directly from your checking account, meaning you're spending your own money in real time. Now, why does this matter? Choosing the right card at the right time can affect your financial health, eligibility for future loans, and how much you end up paying in interest charges or fees. For example, if you use a credit card and don't pay the full balance, you could be hit with a high APR. Debit cards, on the other hand, don't charge interest because you're not borrowing money. When it comes to building credit, credit cards have the upper hand. Every time you make a payment on a credit card, it gets reported to the three major credit bureaus, Equifax, Experian, and TransUnion. This impacts your credit report and influences your FICO score, which lenders use to determine your creditworthiness. Debit cards don't help you build credit because they aren't credit accounts. Let's talk about security and fraud protection. Most credit cards offer zero liability protection, meaning you won't be held responsible for unauthorized transactions. Debit cards also offer some protection, but it's limited and often comes with tighter deadlines. If someone steals your debit card and drains your bank account, it can take days or weeks to get that money back. With credit cards, fraudulent charges are usually reversed immediately. What about rewards and perks? Credit cards often offer cashback, travel rewards, airport lounge access, and extended warranties. Debit cards rarely offer any of these benefits. Some banks have introduced rewards debit cards, but the perks are generally minimal compared to what you get with a credit card. Let's examine budgeting. Debit cards can help you stick to a strict budget because you're spending only what you have. This can be a great tool for people working on financial discipline or those who are new to managing money. However, some people use credit cards for budgeting as well, especially if they pay off the balance in full each month and use tools like spending alerts and expense tracking apps. Fees are another major consideration. Many credit cards come with annual fees, late payment fees, and cash advance fees. Debit cards, meanwhile, may charge overdraft fees, ATM fees, or monthly maintenance fees, depending on your bank. It's important to understand these costs so you can choose the most affordable option. Now let's talk about emergencies. Credit cards provide a financial cushion in case of an unexpected bill or large expense. Having access to a $5,000 credit line can be a lifesaver during a medical emergency or car repair. Debit cards only let you spend what you already have, which can be limiting in urgent situations. If you're planning to travel, credit cards offer a significant advantage. Many travel credit cards come with no foreign transaction fees, travel insurance, car rental insurance, and emergency assistance. Debit cards can work internationally, but they often come with high currency conversion fees and ATM withdrawal limits. Let's consider the impact on financial goals. If your goal is to build a strong credit profile so you can qualify for a mortgage, auto loan, or business credit, using a credit card responsibly is essential. Debit cards won't help with this. That's why many financial advisors recommend a mix of both cards, depending on your goals. What about young adults or students? Many banks offer student credit cards or prepaid debit cards with parental controls. Teaching financial responsibility early can make a huge difference in long-term habits. Starting with a secured credit card or low-limit credit card is often a good idea for young users to build credit safely. Let's address spending psychology. Studies show that people often spend more when using credit cards because it doesn't feel like real money. Debit cards have a more immediate emotional impact because you see your bank balance decrease right away. Knowing this can help you choose the right card for purchases you tend to overspend on. Some businesses, especially online platforms and car rental companies, may not accept debit cards. Credit cards are universally accepted and can offer more flexibility. For example, if you're booking a hotel, using a credit card can help you avoid security holds that tie up your bank funds. Credit card interest can become a trap if you're not careful. If you carry a balance, you're subject to compound interest, and the cost of your purchase can quickly double. Always try to pay off your balance in full before the statement due date to avoid paying interest. Debit cards eliminate this risk entirely since you're not borrowing money. In terms of fraud detection tools, most credit card companies offer real-time transaction alerts, two-factor authentication, and AI-based fraud monitoring. Debit cards are catching up, but the resolution process is typically slower and can disrupt your day-to-day finances. For freelancers and small business owners, using a credit card can make it easier to separate personal and business expenses. Many business credit cards offer expense management tools, employee cards, and higher credit limits, which can be helpful during growth stages. Debit cards often lack these features. Let's talk about digital wallets. Whether you're using Apple Pay, Google Pay, or Samsung Pay, both credit and debit cards can be linked. However, credit cards often come with additional protection when used for mobile payments and online purchases, giving you peace of mind. In terms of identity theft, credit cards usually provide more protection and faster resolution. Since your bank account isn't directly affected, you're not left without funds while fraud is being investigated. This added layer of security can be crucial in a digital-first world. Some people use the envelope budgeting method digitally by allocating funds to separate accounts and using debit cards linked to each one. Others automate their finances using credit cards for all expenses and paying them off from their checking account monthly to earn rewards. Final summary: use a credit card to build credit, earn rewards, and make large or online purchases securely. Use a debit card for everyday spending, strict budgeting, and avoiding debt. Use both strategically to maximize benefits and protect your financial health. Now that you know the pros and cons of credit versus debit, you're in a much better position to protect your wallet and grow your financial future. If you found this video valuable, hit the like button, share it with a friend, and don't forget to subscribe to the channel for more high-impact, real-world financial advice.